Talk.
All right, welcome everybody. We are live.
Hey, how you doing? It's Kawan Mayo calling the binary trade signal BTS. Today we're gonna be trading the BTS R-X price action signal stream. Not signal stream, but the price action indicator and system. And we're going to dive in, do some training, and also just do some basically let you see this how it works and what you need to be looking out for if you purchased this system already, so you know that you're doing everything correctly. Up here you can see we already have price lines drawn. Okay, because price came down to touch and confirm 2 times. Remember, if it comes down to touch your support, your resistance. So it came down here, touch, that's once, came down here, touch twice. So anything after that, which would have been right here, would have been your third trade you would have took. You see that was in the money. That the indicators that we like, the way we want you to use the indicator is, if you see down here, price is oversold or overbought. When it's down here past the 60 line, which is your red and your green, then what you're looking for is you're looking for a reversal. Now, price can come down. It can come down even when it passes the white line. That's still going to be a significant oversold or overbought. But the further it comes down and the further it goes up, the better, because that means you're significantly oversold or overbought, especially if you're over here by the 80. If you get up here by the 80 or above, then you can definitely almost take that trade to the bank that's going to be a reversal. So what we're looking for as far as to know when it's going to reverse, because as you see, it was up here for quite some time. So you was above this red for quite some time, above the 60 for a while. So if you took your trade here, you might have lost. Take your head, you might have lost. So the way you know, just like you see right here, it's breaking our support line. But right here, you see that right now, the red and the green isn't telling us right now that the price is oversold. So both, if it's not in there right now, we're not going to take this trade, and this keeps you from taking a bad trade in support. Now you see it is both of them in there. They both are in there. Such support down here. So now what we're looking for a pinch. What I mean by a pinch is like right here. Let's go right here. You see the pinch, and then you see we got the arrow at the same time. So it's coming down, and then when it pinched, that tells you it's going to be a reversal. See how it reversed? Price was coming down, and then when it pinched, it went up. So it's the same thing right here. See, it came up, and then when the price pinched, this should have been a reversal. That's right here. Okay, and it lets you know that right now reversals are, you're getting 2 minutes. You could have took 2-minute trades on all these reversals. How do you know? Because when you have your price lines drawn, you see how many minutes how many minutes you have from the time that it came down and it came back. So like right here, it came down. Then you count these are 1-minute candles. You got 1, 2, 3, 4, 5, and 6 came down. So that lets you know you could take a 5-minute trade right here and would have been fine. Okay, anything above that, you would have been, you might have got stuck right here and been out the money. Okay, so now right here, you see the indicator still showing that we're highly sold at this point. Now I'm really paying attention. Okay, this is when I'm looking for a reversal. Now we will draw other price line, which is right here. Okay, we got one right there. So that's our price line now. So now you get rid of your old one. Okay, get rid of the old price line. And it can come down, even when we say draw the wicks too. Okay, it can come down to about right there. So anything from here, and then in between, it's your sweet spot. I'm taking a trade. Okay. So I came down, touched, gave us our 2 confirmations. Now you see the pinch. You see, it's about the pinch, and it's way down here by the 80. So I would have got in on this trade. This is a high probability trade I would take. Okay, they go to pinch we're looking for, they go to arrow. Okay, so even with it going away, I'm gonna take that trade because it touched our support. They go to pinch, we're down here in the 80. So even with this reversal, this could just be a retouch. I would still feel confident in taking this trade for 5 minutes. So we're gonna speed forward and see how this trade played out. Okay, so we are here, and it went up So we had the pinch right here. It went up. This was waiting for a 5-minute trade, right? So we got it right here. 1, 2, 3, 4, 5. We'd have been in the money because this way you would have took it right here, or you could have took it right. If you would have took this trade, you could have took it when you got the arrow, and I would have put you right here. So that still would have put you in the money. You would have took it right here. 1, 2, 3, 4, 5 minutes later, you're in the money. Okay. Then it broke. Now to keep you from getting caught up in a situation where it breaks your support, you don't know what to do. Look, it broke support, but if you notice right here, it wasn't oversold or overbought. So to keep yourself safe, you don't take you just wouldn't have took no trade right there. You'd have waited until it was oversold again, like right here. And now when this pinch, that's the trade you could take. Now that's right here. This is a new support line. So we'll draw the new one, get rid of our old ones, so you don't get confused. Okay. And now I came down here, touch. No, we need 2 confirmations. So we wouldn't have did anything on the first one. It retraced. It came down here, touched again, and then it retraced. Okay. So if you want to be safe, and you could consider this one coming in, and then it retraced, and then this one, it would be your second one, and then it retraced. So this would have been your third that you would have took right here if you want to play it safe. If you would have came in and took this one, you still would have been right because you see it came down here. But like I said, I like to play it safe. So let's come down and see where our indicators tell us. Now, this is the only time I probably would have broke that rule. The second, it happened to give me 2 confirmations because I got the arrow. Actually, no, the arrow came on the 3rd confirmation, so that's fine. Like I said, so they go to arrow, they go to pinch, and that's where we got in at. Okay. So 5 would have put you right here. It's this one right here. See this candle? So we would have won that trade because we would have came down here, got in with a touch, and really would have been this one. This one would have been the one that touched. Because look, it touched here once, retrace. Touched here twice, retrace. So when it come out here on this 3rd one, either one of these candles would have been your sweet spot. But let's say this one with the arrow, because right here you see we got the pinch, we got the arrow, plus the touch support. So that's perfect, right? So let's go count 5 minutes later. 1, 2, 3, 4, 5 in the money. Okay, anything above this white line is in the money. And then you also see where you could have took some more trades if you chose to. If you're playing with fire right here, you come down and you would have took this one and touch. 1, 2, 3, 4, 5 in the money. Came down here, touch. 1, 2, 3, 4, 5 in the money. What I like to teach though is only go take the third. I say the 3rd and maybe 4th trade. And then after that, don't take no more. What I mean by that is, touch once, it retrace. It touch twice, it retrace. All right, the 3rd one I'm taking. 4th one I take after that. You could be playing with fire because you don't know if it's going to be a reversal or not. It's going to break. You don't know. I mean, not reverse. You don't know if it's about to break your support or your resistance. So you don't want to get caught up in that. So to not get caught up in that, play it safe. You just only take the 3rd trade. Now look at right here. You see we oversold now. I mean, overbought now. And we had a confirmation here once it dropped, and right here it dropped. So if it comes up here and touches this support line, this resistance line, then we're going to take that trade. Now, right now, it's respecting this resistance. Okay? See that resistance right there? It's respecting that resistance. That's why you got this pinch. But I'd rather go for the high probability one, so I'm going to go for its highest point. So anytime you see that, you want to go for its highest point. So erase that one. Don't worry about that. And more concentrate on this one, and even better, this one. So I'll move go a little forward, see where we're at. Okay. So let's see where we're at. So we came up here, it came down, touch once, retrace, came down twice. So this would have been a trade you would have took right here. So that's the first one, this is the second one. And you could, and then you would have took that one, all right? So we done won that. Came down here, took that. 1, 2, 3, 4, 5 later, boom. That was the sweet spot right there. Then you came down here, you touched again. Okay, now we take this one. 1, 2, 3, 4, 5 deep in the money. Now, remember I told you the 4th one, I mean the 5th one, anything after that we might be playing with fire now, So we want to be cautious. So it came down and touch, you see it broke, especially if you see it break your support. Because now really that support. See, it came down here, touched the wick. This came down, and now this even came down to here. So if you're dealing with a high probability situation, you could erase this support after it broke a few times and only played off of where the wicks came down to its lowest points. So that means when it came down here, you would have took your trade. Okay, right here, boom, and then 1, 2, 3, 4, 5. You see, well in the money, deep. Okay. Anytime you break your support resistance, at that point, you want to move on. And I mean, you don't want to take no more chances. Like if you see it respects it like this and comes down, respects, that's fine. But the minute that it breaks, like when we was up here and this was your support, and you see it significantly broke, it broke that support right there. Then at that point, when you see it breaks right here, that's when you get cautious. Okay, even though we won this trade, I wouldn't come down and I wouldn't take this one. You see when it came back down and touched it again, I wouldn't take none of these because now we're playing with fire. And look, 1, 2, 3, 4, 5. Well, you actually would have still won. But like I said, that's the difference in the high probability situation and just the trade situation. We want all high probability situations, not just regular basic trade situations. Okay, so now this would be the new, if you would be playing it safe, this would be the new support, and you're waiting for price to come down right there. And yep, right there. So let's go move forward and let's see where we're at. Okay, so this is why we need 2 confirmations. It came down here, touched once, and went to the moon. So a person coming back trying to take this trade again might say, all right, the next time it touched, I'm taking that trade. And look what happened. It came down and it gave you a fake out like it was going to leave, and then it broke. So a person would have lost this trade tremendously. 1, 2, 3, 4, 5. 5 minutes take you deep out the money, way down here, way down to the new support line. But if you would have been following the rules, you wouldn't have got caught in that situation because for one, it came down here and it touched down here. But look, it never gave you a pinch. It was still going down. It was still going down to the downside. So that lets you know that it was going to keep on moving. That was one confirmation. The second confirmation was the fact that it never gave you the a second confirmation of retracing. It immediately came back down. So at that point, when it came down on its third one, we would have just let that go. See, we'll let that go. So we always need 2 confirmations. Right here, we got a confirmation 1, and it went up. But then the second confirmation, it broke. So that's not, we're not going to respect that support line. We draw a new support line right here. It came down, it retraced. It came down, it retraced. So guess what? This is a good support now. So we'll draw this support and get rid of this one. Okay. Let me take this one off so I don't confuse people. So now we got that. Okay, so now it touched, it retraced, it touched, it retraced. So now anything from there in this zone area where you see the wick came down to its lowest, anything right here, we're going to take that trade. So let's see if price comes back down, touch, and then what happens. Okay, so price hasn't came back here and touched, but price did come down right here. As you see, it came up and then it retraced. See, it came up here and it retraced. It came up here and then retraced. See, right here, and then retraced. So the next time it touches, then we'll take that trade. So now we got a proper support. We have a proper resistance. We can take off the old ones if we want, so we don't be confused, because those are the only ones that matter at this point. This is also we're trading off to the 1-minute chart right now. For the 1-minute chart, we'll be taking 5 minutes and 2-minute trades. So that's what we're currently doing. I'll fast forward a little bit. Okay, so we wanted now right here. It didn't quite touch our support line, but you did see the pinch and you did see the arrow, but still it didn't touch our support. So we will let that go. Because all about getting the best strike, and you want to get the best position and the best strike. That way you're in the position where, you know, if you barely win a trade, you know, by an inch, then you got that room to play with. If you don't get the proper strike, then it can hurt you. like right here. Okay, this what we got the first confirmation second. So now this trade we're gonna take. So let's see if that would have been a winner or a loser. Came up here, touched 1, 2, 3, 4, 5. This is touchy because if you'd have got in right here, then it could have tied. But if you got in when it touched the line, you'd have lost that trade. Yep. If you got in right here, 1, 2, 3, 4, 5, you'd have lost. Now if you'd have waited, because right here, let me see if it pinched. It pinched, look like it pinched right about here. If you'd have took it here, 1, 2, 3, yep, still would have lost. So you'd have lost that trade. But also, remember I told you, if it breaks your support, your resistance to your support, then that's when you want to kind of be cautious anyways. It broke here, it retraced. But it also broke right here. See, that was breaking the line. You see the wick, and it retraced. It broke right here. So it's already letting you know that, hey, that resistance is now weak, and it's going to start forming a new resistance, like right here. That's probably going to be the new resistance, okay? So at that point, you will be looking out for that. That's what keeps you from, over trading the support or the resistance as well. So let's go up a little bit further and see how this all played out, okay? Okay, so like I said, this support, this line right here was no longer, we no longer respect this support, this resistance, so we take that one off because prices already broke that resistance and formed a new resistance. It came up here, and then it came up here and retraced. Okay, right here, it came up here and retraced, and it came up here and retraced. So then we took it right here. Okay, right about here, or right here. But remember, we looking for the confirmation. So right here, we didn't get no confirmation. It's still going up into the oversold region. So we wait. Then up here, now we're happy because we're over here above the 80. Remember, I told you above or below the 80, you can pretty much take that to the bank. So we're above the 80. Okay. In actuality, it might look like it never touched there before, but look at all the way over here. See the support right here? See? That was support for here, which made this resistance here. Okay? Might be a little confusing, but bear with me. Take this off. Now look. Okay? Price that actually broke. Okay? Broke that. This is the first time it's coming up. But the reason why I would have still gotten in without it giving me the 2 confirmation rules, because why? We got 3 confirmations as far as our indicator goes. 1 was it touching support, okay? Resistance. 2 was the fact that you see that is above the 80 and it's pinching, and we got an arrow. So when you put all them 3 together, that's your sweet spot. That's the perfect combination. That's what you want right there. So the fact you got 1, 2, 3, look how deep in the money that is. Look how deep. That's a beautiful trade, 5 minutes that you can take to the bank every time. That's what we're looking for. We're looking for a pinch, arrow, above the 80. So let's say more about, above or below the 80. You see what I'm saying? Okay. So let's move a little bit forward. Now you can see right here, that's what we're waiting for. See, sometimes you gotta be patient, and it took time for price to get all the way over here. But look, when price finally came, that was the sweet spot again. It came down, boom. Remember I told you anything right here in between, touching this line in between in there is good. So when it came below, you already knew we was taking that to the bank. You see you got the pinch, okay, right there. And look, plus the arrow. So that's 1, 2, 3 confirmations, and it's out of here. That's it. That's your best situation. That's what you're looking for. Now right here, you see it's respecting a whole different support line. It look like it's trying to support this one. Okay, but again, we already see that prices came way up here, so we don't want to take anything below this resistance line right here. So let this price grow all the way up to here, like you see it's doing, and if it happens to come, cool. Now you see it's already saying that it's already oversold. Overbought, and you already see it. You get an indication with the arrow and the pinch, so there's a chance that it can drop from this point right here. But I can always deal with high probability situations. I'm not going to play off of this small resistance right here. That's a very weak resistance. You see it came here and it went down. It came up in here, went down, but it also broke once and it broke twice. So it's a chance that it could break again and go to the top side up here. So I'm not even going to play with fire like that. And look, that's what it looks like that's what it's trying to do. So I won't even play with that. I'm gonna watch it, see if it comes up to here, okay? And the price come up to here, then I'm definitely gonna take that. That's when I'll decide to go in, okay? And actually, I'll take that back. No, I'm still looking for 2 confirmations. So this was our first confirmation. So we still need a second one. So let's erase this. Okay, now let's go up. So this would have been our second confirmation. But as we see, we did. It came down, but it continued to go up. Basically, I could tell that we're in the uptrend now. See, price is trending. So that's why we keep breaking these support lines. That's when we look at this indicator right here. Okay, this is the BTS trend, a trend indicator. Let you know if you're in a trend or not, or ranging, or let you know what market trend. Right now, we're in an uptrend. So while we're in an uptrend, I would switch my tools, my drawing tools, to trend lines instead of price lines. You go to the lowest wick. Okay. Excuse me, let's try it one more time. Go to the lowest wick point, and then you're trying to match where the lowest points this came to. So it would be right here, but really would be right here. Now, to get accurate lines, what you can also do is change your time frame. So get a higher time frame, draw your line there, see how it is. See, like right here, you see it looks a little more accurate. Okay. See how it looks at 15 minutes. And then you can go back to the 1 minute and then see where you stand, and then see if it kind of, still looks the same. Drawing trend lines can get a little tricky, because you might draw them too close. You might need to come a little further away. Like I said, it can get a little tricky. But this is how you draw your trend line. So it says it's still trending up. We came down and then it went back up. So in all actuality, you would actually have to bring this a little bit further out, because it's saying it's still trending up, and this is where it went. So now this trend line ain't even good. We would come from here to here, and from right there at this point, if it continued to go up. Okay, so we're still in the trend right there is where I probably will take the trade, or I'll be looking to see if this is going to come into right there. See, if it's going to come into oversold or overbought region, but we can still watch it from right here and see how that would have played out for 5 minutes. Okay, so that's when we would have took our loss right there, because we would have got in right here. And as you see, it started to go down. But what happened was, and this is gonna happen sometimes, you're gonna do everything right. You're gonna see, okay, I just drew my trend lines, and then all of a sudden, look, now we're back in a ranging market. So you caught it late, and if that happens, then we go back to our drawing tools, go to the price line. This would have been a support now. Resistance now. This line's irrelevant. And we're still looking for our resistance, and we're still looking for our support. We're in our support once we see our reversal. So if this continues to go up, then that's the support right there. Okay. If it continues that way, that would be our support, and we'll be looking for 2 confirmations before we start trading off of it. As of right now, we don't have a confirmation yet. We only got the 1. So if it doesn't break this, see, and there goes the break. So that would have caught us from getting caught up in that. But as you see, it came down, and it came down to our good support. This is the one that we want to respect, because this is a strong support right here. It's the lowest point that's been in a long time. So you see, it came down, and we took that trade for 5 minutes. 1, 2, 3, 4, 5. Deep in the money, you're decent. Even right here, 1, 2, 3, 4, 5. Wait, came right here. 1, 2, 3, 4, 5. We got to see how that closes out. So we got to see how this candle closes out. If you would have took this trade, and this way you actually got the pinch. Okay, so we got the pinch right here to let you know We got it touching our support line, and we got the arrow. So this is our high probability trade that we want to take right here, right, guys? This is the one we said. So here we go. Take this one. We got in. That's 1, 2, 3, 4, 5. You don't want that trade. 1, 2, 3, 4, 5. You don't want both of those. Okay. So now it's going back up. So one minute candles, you be taking 5-minute trades. Off of the 5-minute chart, you be taking 15-minute trades and 30-minute trades. And the longer the time frame, the higher probability your trade is going to be, which I'm going to demonstrate. Okay. So remember I said these are 5-minute charts, so you be taking 15-minute trades off of this, right? So 5, 10, 15, look how deep that is. Okay, come down. 5, 10, 15, look how deep that is. Came down. 5, 10, 15, look how deep that is. See that? This would have been your resistance for a while. Okay, until it broke up here. Same thing, came up here and touched. 5, 10, 15, look how deep that is. Came here and touched. 5, 10, 15, look how deep that is. See that? Came up and touched. I'll be your first confirmation, second confirmation. It's your third. You would have took it. Look at this. 5, 10, 15, deep in the money. Way down here. See? See, I only take 5-minute trades and 2-minute trades when I'm doing class and demonstrating because it's quicker. I know people don't want to sit here for 15 minutes to see if you want to lost the trade. That's the only reason why I take those short trades, on camera. But if you want to be more successful, you want to have a high probability chances of winning, then take longer trades. There you go. Let's go to the 15-minute chart. 15-minute chart, you can take 30-minute trades. Okay, so let's see. Here we go. Line it up. Line it up. Okay, came down. These are 15-minute charts. So right there in the money, came down in the money, came down in the money. Came down here, touch in the money. You would took it right here. 1 confirmation, 2, you could have took this one in the money. It's all day. See, came down here and touched. See the arrow right here? 2 trades later in the money. Came down here and touched in the money. Came down here and touched deep in the money. See what I'm saying? Came up here and touched our support. Our resistance up here, look, deep in the money. Even where you got the arrow at. You would have came in right here. We got our arrow. Look at that. Deep in the money. See? Deep in the money. Look at it. Came down here and touch. Got your arrow. Deep in the money. Came down here and touch. Look at this. Deep in the money right here. Came down here and touch. Deep in the money right here. Came down here and touch. Deep in the money right here. Remember, we only need 2 candles because these are 15 minutes and we taking 30-minute trades. So came up here, touch, 30 minutes later, deep in the money. See this? This is a high probability situation. 30-minute charts. Take an hour trade. See this? Right here. In the money. In the money. Anything below or above that line. See, right here, came out and touch in the money. It's an hour right there. So again, the higher probability situations, it's going to be you're going to get less time to trade, of course, because these are longer time frames, but you're going to get more opportunities. Bigger wins when you finally win. See that? That's deep in the money because these are 30-minute candles. So with this being a 30-minute candle, with this being, 30-minute candle, look where this would be at if we was to change it, if we can even see it. But we just changed it to 15 minutes. Let me just show you how significantly high that is. Hold on, let me show you something real fast. We erase all the lines so we don't confuse the charts. So remove all joints. Let me show you something real fast. So we're on a 30-minute chart. Okay, so right here, touch, and we're out of here, right? And an hour later would have been right here. So that's where it closed at. Now that doesn't look like much on a 30-minute chart, but look how much this is when you're looking on a 1-minute chart. Let's see if we can go find that line. We can't even find it because it's so high. Okay, so let's Go to 5 minutes, see if we can find it. Okay. So this is where you came in at, touch. This is where you ended up at. So this is a 5-minute chart. So it came down right here, touch somewhere right here, 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55. So you up here, like I said, see the difference? See how deep that was? So higher time frames is going to get you better. It's going to get you, more accurate results. You can even see it. Look at this hour chart. You see how it isn't so volatile? It's just cut and dry, straight pure price action. See, it's not all over the place. You don't see a lot of breakage. You don't see it breaking your support and your resistance a lot, like you do when it's like a 1-minute chart. 1-minute chart breaks it all the time, all over the place. You got a little more consistency. See what I'm saying? Look at that. You got a lot more consistency when it's on a larger time frame. Look at it. We don't have lines all over the place. That's real easy to read. It's real simple. See, real simple. Come up here and touch, deep in the money. Came up here and touch, deep in the money. Well, not deep. Yeah, that was deep right there, deep in the money. Came up here and touch, deep in the money. But whether it's deep or not, these are all wins though. And then right here, nothing's going on. No problem. You're not messing with those. It didn't touch. Came down here and touched, in the money. Came in and touched, in the money. It finally broke. When it broke, it made support turn to resistance. See, started bouncing off of that, turned down to resistance. No problem. 1 confirmation, 2 confirmation. We take it after that. This is the 3rd, and look, we in the money. Came down here, touched. That was our new one. Support line, 1 confirmation, and out. So we didn't do nothing with it. Came down, broke it. No problem. Came down here. Actually, this was support for a while. Look, it came down here and touched, and it left. Came down here, touched again, and it left. So the 3rd time we took it. They go to arrow, they go to pinch that we're looking for, and look, deep in the money, way up here. Okay. So as a quick recap, draw your lines as such and respect it being oversold or overbought, which is above the 60 or below the 60. So that's what you see right there. Okay, that's your green line and your red line. You're looking for a pinch like that. You're looking for an arrow, and you're looking for it to be touching your support and resistance. Now, with that being said, sometimes you might get 1 of the 3. So, you know what I mean? You might get just touching your support or your resistance, your support, your resistance, but you're not getting no arrow, you're not getting no pinch. That's going to happen. Sometimes you're going to get this arrow and a pinch, but it might not be quite touching your support resistance line. And sometimes I suggest not taking those trades. But anytime it is touching support resistance and you got a 2nd confirmation, then I would take the trade. If I get 3 confirmations, then I'm definitely taking the trade. So that's the way it works. So in all these situations, you see the red arrow, plus you see it was oversold, overbought, and you see the pinch, I'm gonna take it, even though it might, barely be up here. I'm taking it because look, those are the ones that you see are deep in the money. Same thing right here. It comes down, see the arrow, I see the pinch, and it's out of here. So I'm gonna take that. Okay, so we back over here. All right, so I don't want this video to be too long, and we've already been going for quite some time, so I'm gonna end it right there. I'll come back with some more training next week. It's Friday, so I'll come back with some more training on Monday, and we'll do it again, and I'll answer any questions. We'll do a Q&A, so if anybody have any questions, or they want to know, if they have the system and still, they need to just get some more clarification or some more insight, then next week on Monday, we'll do a Q&A. You guys can log in and chat. That being said, it's Kawan Mayo. Thank you for chatting with us today, watching this training, and I'm gone.
Thanks, Bunch. See you guys next week.